What has been the market reaction to Nvidia's earnings? As you will know, we are most of the way through Q3 earnings season in the US, and we've seen so far 94% of companies report their earnings. However, one of the major players has only reported their earnings last night, and that's Nvidia. Now, why are we talking about Nvidia in this video? Well, it's now the largest company by market cap. If we look at its weighting within the S&P 500, that's at 7.2%. And if we look at its weighting in something like MSCI World, so looking at a global equity index, that's at 5.1%. And Nvidia has become the world's largest stock because of its performance this year. It's up nearly 200%. And that's because it's at the forefront of the AI theme that we've seen within financial markets. Nvidia not only provides semiconductors that are used within AI, but it also hosts data centers that allow others to undertake AI research and also development. Now, what have we seen Nvidia report from its earnings? Well, they've been developing a new type of semiconductor chip. That was meant to be released in previous quarters, but there had been delays to the production process. So they've confirmed that it will be released in this coming quarter. When they've talked about the demand for that chip, it's been very strong, with demand exceeding supply for several quarters into the future. So the backlog for Nvidia continues to look positive, and we're continuing to see people buy in to the AI theme. When they've talked around the margins, however, for that chip, we're seeing that margins are going to fall slightly for Nvidia. So margins are currently at 75%. However, they could fall down to 73%. And that's because of some of the costs associated with producing the chip are slightly higher than what they originally expected. However, what we could see is that as production starts, that economies of scale start to kick in. So that means that production costs fall and margins could rise as a result of that. However, what we've seen from financial markets and how they've digested that information is that the stock has slightly fallen because of that guidance, down about 2%. This is despite revenue expectations and profit expectations being exceeded by the company. And this is just due to some of the lofty valuations that the stock trades on. So it's an expensive stock and the market expects high delivery from the company. Thank you for watching today's video, and we'll catch you in tomorrow's episode.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.